It is my opinion that you do not really understand the concept of banking. All the banks are broke. Bank Santander, Deutsche Bank, Royal Bank of Scotland, they're all broke. And why are they broke? It isn't an act of God. It isn't some sort of tsunami. They're broke because we have a system called fractional reserve banking.
Something biblical is happening with silver, as many suggest that this is the end of fiat currency and the end of price suppression. We're going to cover a whole bunch of stuff. I want you guys to pay attention. I also made a boots on the ground video today, and I interviewed a coin shop just to make sure that what we were saying is accurate. But let's start going over prices, and I want to show you guys the biggest move in silver since 2009. Starting with prices, and by the way, this is just as the recording of this video, silver's sitting at 108.10, and we're going to do some price forecasting. We're going to show you guys the math and why we're saying what we're saying. But regardless, you guys, this went up to $117.70. I want you to understand that this is the biggest movement in silver. And this is at the same time where we're hearing an overwhelming amount of rumors that mom and pop are trying to sell. So if there's a huge influx of mom and pop trying to sell, what does that tell us? It should tell us that retail demand is not driving prices. And let's look at the yields real quick. If you purchased this 5 days ago, not counting the premium, remember it's spot plus premium, you're up 20%. 1 month ago, 51%. 3 months ago, 131%. Something biblical is happening with silver. Now, here's the silver spot price. Remember, you guys, the spot price is the physical price. So if you want to buy silver or if you want to sell silver, you're going to pay it at spot, and then you're going to pay a premium up or down depending on if you're selling. But right now it's at 106.32. So just remember, the future price and the spot price are two different things. Now, the incredible thing is China closed at $123 per ounce. $123 per ounce. Right now it's roughly about 109. That is a spread of $14. That gap, you guys, is going to be filled. Also, what's very interesting is the gold to silver ratio. And we're going to talk a lot more about that today, because that's part of the reason why we think the prices are headed to where they're going to head. But right now it's at 47.62, meaning that 47 ounces of silver equals just 1 ounce of gold. Now I'm going to go back to 2011 right here. In 2011, when we had the price crash and all these things, that is not the same as today, by the way, it was sitting at 32.63. So we're not even there yet. Just from that information alone, it's got a lot more run in it. But regardless, you guys, we're at 47.62 historically. And what Mitch has been saying, we're probably going to be more at 15 to 1. And again, we're at 47.62 to 1 right now. Now take a look at this, guys. From Silver Ape Keen, once again, TD Precious Metals temporarily suspends sales of all silver products. So I want you guys, if you hear a rumor, whether it's to buy or whether it's to sell, I want you guys to confirm what they're saying, because nobody is getting this right. So I went to TD and I was like, okay, sure enough, they're 100-ounce bars. They're sold out of those. So then I went to the 10-ounce bars. And I was like, okay, all right, fair enough. They're also out of the 10-ounce bars. So out of the 100-ounce, they're out of the 10-ounce. But here's the but, guys. When I went to the 1-ounce, look at this. Okay, they got 2 more selections. Look at that. So they're not out of everything. They're just out of almost everything. And we also have news from JM Bullion. So if everyone is selling, right, there's this panic sell. And there are people. I went to a coin shop today. There are a lot of mom and pops that are trying to sell, and they're literally giving their assets to like a foreign government, because that's what's happening right now. The biggest buyer is not mom and pop in retail. The biggest buyer are foreign countries right now. But this is from JM Bullion, which is issuing a statement saying this: the unprecedented market activity has significantly increased order volume. As a result, some areas of our operation are currently under strain. So they're saying there's a lot going on. Now, when I went there, okay, I went to JM Bullion and I was like, wow, okay, they're out of 1-ounce bars as well, right? Look at it. It says pre-sale. This, the soonest is coming in is February 27th. That's over a month away. So JM Bullion is out of 1-ounce silver bars. But when I go to SD Bullion, not that I would use them, SD Bullion actually does have 100-ounce bars. The cheapest they're selling this for is at 111. But here's what I want you guys to do. You guys have to stop listening to rumors. If you want to sell or if you want to buy, I'm going to show you how you should research that. You're not just going to randomly go into a shop. You're going to research. Again, selling or buying, I don't care. And also, don't panic buy, don't panic sell. You want to buy slow, hold long. That's just what I'm doing. Okay, you don't have to do that. But if you're worried about people buying silver, it is so misplaced. It is overwhelmingly insane to me. Now, there is strain of liquidity, but there's strain of liquidity because there's too much buying, not because there's too much selling. But if you do want to sell, okay, use this site. At the very least, use this site. This is bullionexchanges.com. Click the sell to us, and you'll see here that they are purchasing overwhelming amounts of gold and silver. Here's the Silver Eagles. Look at, they raised the premium. Yesterday, the premium was $6, so they raised it to $7.50. Why? Because there's a liquidity strain. You guys are going to see that on the video tomorrow when I interviewed the coin dealer, but there is a liquidity strain. And so to protect themselves, they have to increase the premium on the spot. But look at American Silver Eagles. They're still buying those at $100.26. When I go down here to look at rounds, a lot of people are doing the genetic rounds. Look at $9.50 premium. That's about a 10% premium right now, but you can still sell at $98.26. I mean, here's your 10-ounce generic silver bars right here. Look at $990. So that's $99 an ounce. Now, if you want to buy, same thing. You must do your research. And here's where I like to go. This is finebullionprices.com. So research if you're going to go in, research if you're going to go out, but don't panic no matter what you do. And odds are the prices are going to continue to skyrocket. We're about to go over that. But say, for example, the best price is here, $11,039, which is $110 per ounce. You click that, and then you start doing your due diligence. You start looking at all these ratings. You're probably not going to want to buy on eBay. But either way, do not just randomly go into purchase or sell silver. Literally do a couple hours of research. Watch any one of our videos, use the resources that we're giving you, because people are getting crazy right now. And I'm going to show you some comments that were on yesterday's video of people that were yelling at me. And then the market opens and it's the biggest spike in history. So it's like everyone needs to calm down. So what we're going to do now is we're going to try to calm everyone down. And Mitch is going to go over some price forecast using math. Okay, we're going to use math and the volatility to try to show you guys the potential direction of silver. Mitch Vexler, sir, when you're ready.
Travis made a comment about all the people going to sell their metal, but I made a comment yesterday that rumors exist for the sole purpose to manipulate. And what you are seeing play out is, in fact, the shakeout of the weak hands. When people show up and say, well, we're going to sell our metal today because it's at an all-time high, so far there's been no justification to sell. In fact, it'll be just the opposite by the time we're done this video. We can further explain what it is that you're seeing. And to sell at a 10% or a $15 premium, be it one and the same, that's to sell and exit out. Well, if you change your mind as a person who's selling today and you decide in a week from now, oh, I made a mistake, I want to buy back, you literally just paid $17, well, $15 plus whatever you pay on the way in, maybe another $4. So let's call it just short of $20 for the exact same 1 ounce coin. That's crazy. You're literally handing your profit away. And with regard to his other comment about the dealers and why there's so much stress on the liquidity, most coin dealers have a bank floor plan. They're able to hold a certain amount of inventory. They're not designed for buying and selling coins on a daily or weekly basis. They're not created to do that. And frankly, if you're thinking, well, I want to own a coin, 100-ounce bar, whatever, on a short-term basis, best you not play, because you can get clipped. And now I'm going to show you exactly why you can get clipped. And it's because of your own lack of patience and not understanding what you're doing. Holding metals is the appropriate thing to do for whatever size portfolio you have. Trading physical metals is nuts. You're going to get clipped because you can get 10 days, 2 legs, 10 days, as in 10 bars, 2 legs sideways to down. And again, that shakes out the weak hands. So that chart that Travis is showing you, why is this so important? Well, what you're seeing here in this bracket, this is a 1 standard deviation move. That's all it is, based on what's happening here, which is your implied volatility, your IV rank. Implied volatility rank is just short of 90, as compared to gold, where the IV rank is about 28. So that combination of 90 is what's creating, somewhere around late February, February 11th, this 1 standard deviation from 140 on the high to 96 on the low. That's normal. So if it's normal, then under what circumstance are you selling and for what purpose? Because it has nothing to do with the market. It has nothing to do with the implied volatility. It has to do with ego. Oh, I made this amount of money. My metal is way up. Okay.
Mitch, just to clarify, so what you're saying is the one standard deviation, the low would be around $96, the high would be about $140. The reason for that gap is the volatility is so massive. So you're expecting this to kind of play out by February 17th. Is that correct so far?
Well, it could be February 17th. I mean, there's no way to tell. But if you were selling options and you're selling a put down here and you're selling a call up here, so you sell a 136 call, you sell a 94 put, well, that's a strangle. You really don't care what the market is doing in between in here. As long as it doesn't breach this and doesn't breach this, you're happy. You're making money. There's nothing in this chart so far that says there's a reason to sell. Nothing. If you get a pullback, that's expected. And to that point, look right here. Look at the close yesterday. Okay. So the close was give or take around 101. It bounced to 118. But do you see this little gap in here? That gap between that close and that open, that's a gap. More than likely, that gap is going to fill. That's a normal condition of the market. There isn't a huge pullback in here past 10 bars, 10 days, two legs sideways to down. It hasn't happened. Yes, it's gone parabolic. There's no doubt. Yes, you can expect a pullback. That's what we said. And I also said this is going to be a face-ripping move. The volatility is here. This is an 83 volatility, 86 volatility, depends what you're looking at. Right here. That's huge. Gold is 28. That's why this bridge between the low and the high is so large. If you take it up to a 2 standard deviation move on the exact same time frame, you're 157 on the high to 78 on the low on a 2 standard deviation move. That would be excessive, but not out of the question of the market. The market's about price discovery. And as part of price discovery, its intent, that is the way the market is created, is to shake out the weak hands. These people who are selling today, in truth, they're the weak hands. They can't sustain holding long-term for whatever reason. Ego, call it whatever you want. It doesn't matter. They look at it and say, well, I made a profit, I'm out. But nobody's calculating how much is it costing me to get out? How much did I pay to get in? And what is my real profit? Now, once you have that answer, figure out what's the real loss. If it heads within the next 30 days, for the sake of conversation, to 135, how much more money did you give up? Not only did you give up your cost to get out, your premium, but now you gave up the delta between 118 and 135 or 150. You possibly gave up another $30 on top because you pulled the trigger too early, because you didn't understand what you're doing. And this is happening. And even the broker dealers, the coin dealers themselves can't take the heat because they don't have enough money to hold a floor plan big enough for those people who want to sell, which means they have to buy. That's why the premiums have exploded on the way out, because they have to inventory your coins. And then what happens? Well, they get those coins and they turn around, they sell those coins to somebody, i.e. India or China, who says, we'll take it all. You're literally walking away from money, even with a pullback, handing your money over to somebody else because you didn't have the patience and you didn't understand what you were doing. You may have got in at a good price and it went up and it made profit. But as we're going to discuss further on in this video, we're going to explain to you, just like we did yesterday, that the infrastructure is broken and it's getting worse. Given that fact, why in the world would you get out and just simply not take your coins or whatever it is you've got and ignore it? Go bury it in the backyard and forget it even exists. And one day you're going to wake up and it'll be north of 300.
Mitch, can you go over the numbers on the red line, which is 3 standard deviations? I mean, there's been incredible volatility in silver. It's a long stretch to think we'd have a 3 standard deviation, but this whole thing is no man's land. The system is broken. It's the end of price suppression. So it's possible. What does the 3 standard deviation tell us?
If it gets into 3 standard deviation, in my humble opinion, it doesn't change. Why? Because look at what happened. We came from 40 way back here. But do you realize that was just in November? We were at 40. You're at 115 right now. What's the problem?
Oh, what's the max on there?
188. Isn't it interesting? Or 190. I said 192 yesterday.
Okay, and that's to February. It looks like February 18th. So on a 3 standard deviation on the upward trajectory by February 18th, it could go to potentially over 180 and potentially go down to $40 if we didn't have all of these geopolitical weaponization of the dollar versus silver. Is that correct so far?
The probability of it coming back that far is virtually nothing. Could it? Sure, absolutely. But look at the probabilities. Look at what it has done. Now, what can you expect? Well, here's an A to B, a B to C, right? And then a C to D, which is the exact same length, which is what we showed on one of the Fibonacci ratios, A to B, B to C, C to D. That's what you've got. That's the pattern. What can you expect? Well, for starters, you can expect this gap to fill. You can also expect that it's going to come back and test resistance. Where's resistance? Right here.
95
$95 move is not out of the question. It should happen. Frankly, it'd be great if it did. That's a buying opportunity.
So hopefully it will crash down to 95 so we can buy more, huh?
Well, that would be the first touch. The second touch would be right here at 86. Somewhere in that range, there's more buy. So let's say it comes down, you get an ABC, right? So it ends up right about here, which is 86,771. And then you get an outside bull bar. Well, that's your signal to buy. So all this nonsense, it comes back to this very simple thing. Rumors exist for the sole purpose to manipulate. These people that are selling, maybe they truly said, okay, I bought it at 20, I'm getting out of this thing. That's perfectly fine if that's their decision. They have that right to make that decision. But if they were listening in the last week to all the white noise that's out there, you got to sell, you got to sell. All that white noise did is take your asset, your money, your profit, and shove it into the pocket of somebody else in a foreign country who's buying. How do you know that China wasn't behind the manipulation? Sell, 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 sell. AI, sell, 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 sell. It's all nonsense because that's not what the math shows you. That's not what the chart shows you. That's not what the options show you.
Well, I went into the street. I went to the nearest coin shop, and I was there for about an hour and a half, 2 hours. Should be a great video. They're paying cash for silver. People, if they want to sell silver, they're not going to have an issue with that unless they go in blind. If you go in blind and naive, you go to a pawn shop, yeah, you can get ripped off 30% under spot and things like that. But if you're doing the bare minimum, you won't. And so, Mitch, I want to talk now to the viewers about all of the reasons why it's likely that the price will be on the uptrend in the standard deviation versus going down. And again, you guys, two primary things here, not retail. The price is not being driven by you and me. Okay. This is a crisis of confidence, meaning it's probably the end of fiat. And then number two, it's definitely the end of price suppression. You see that with these companies getting massive, massive hits by shorting silver. Let's go into this segment now. Now, this is what Tim Hack is saying on X. Physical settled COMEX silver future contracts for January have exceeded the $9,000 mark and now stand at 9,181, which corresponds to approximately 46 million ounces of silver. Here's the important thing. At this rate, there is no chance that anyone holding COMEX silver future contracts will be able to physically settle beyond March. And it could accelerate further. The COMEX, and with it, the Western pricing power for precious metals, is on the verge of collapse. This means that nothing should stand in the way of revaluation of commodities. As soon as the East has the financial power, it will make the West pay for its exploitation and wars by pushing up the prices of commodities sharply. So that's why I said mom and pop right now are panic selling to China and India. And then they're going to take that and they're going to price out mom and pop. Just don't do anything drastic is the only point. Don't do anything drastic. Silver is needed in pretty much any high-tech weapon system. China, that refines 70% of the world's silver, isn't exporting since January 1st, and the US is running out of it. And this one here, this is very interesting. For silver to reach the 1980 peak adjusted to housing, it would have to reach, okay, Just adjust it to housing, going back to 1980. Because people are like, oh, it's the same thing happening right now as the 1980s in 2011. No, it's not. It's not the same thing, not at all. You just see the chart go straight up and you're like, panic mode, panic mode. This can't last forever, right? We are in a biblical change right now. I don't know how else to say this, but it would be $349.20 compared to housing back in 1980. $349.20. But to reach M2 adjusted, Mitch went over this actually yesterday, to reach M2 adjusted, $1,049 per ounce. To reach S&P adjustment, again, we're just talking about the 1980s. People are like, that's 1980s all over again. Okay, fine. Then let's wait for prices of silver to get to $2,796 an ounce. If it's not going to get to that, then it's nothing like the 80s and it's not like the 2011s. But this is also interesting. Silver Deegan came out and said, using shadow stats, the 1980s silver high of $50 adjusted for inflation. So we're just going to adjust for inflation now. Okay. Per ounce. Again, we're just comparing 1980s again, but adjusted for inflation, $1,639. This is insane. I love this stat. Silver officially outperforms Bitcoin by 50% over the last 5 years. So if you thought Bitcoin prices were crazy and what was happening with Bitcoin's crazy, silver beat it. Look at silver's at a 300% return. Bitcoin's at 199% return. The crypto bros are out in full force trying to get us to sell our silver and buy Bitcoin. This is also interesting. Just in, the UAE's prince plans to buy silver worth $340 billion. Okay, so again, where's the demand coming from? Mom and pop can't keep up with princes and countries. Mom and pop aren't driving the price of silver. I can't say that any clearer than this, guys. 340 billion by 2028 could become second largest asset holder of world's wealthiest family. And they're saying that silver could reach $250 an ounce by 2026. This is very interesting. Goldman Sachs' top precious metal trader leaves bank. The reason why is that they were fired for shorting gold and silver into historical parabolic vertical moves. They don't want to let go of control. They want to still imagine they can suppress the prices of silver. But as we see, they can no longer do that, and people are losing millions of dollars and getting fired as a result. Just wanted to remind you guys, okay? Just want to remind you what Donald Trump said in 2017. It's just 2017. That was what is that, like 9 years ago or something? Silver is the most, emphasis on the most, and then second emphasis, undervalued asset on the planet. It's been money for all of human history, and yet it sits at $16.50 an ounce. But I think that's interesting. It's been money for all of human history. So I wish he was kind of like, talking about that instead of crypto, but it is what it is. And let's listen to this video real quick. And then Mitch and I are going to talk about the crisis of confidence and the end of price suppression.
Yeah, it's worrisome. The Fed basically has become now just a giant hedge fund. It's lost $1 trillion, and counting. It's going to be a gigantic loss. What it does is borrows money at 5.4% from banks and then dumps it into government bonds. So think what that trade does. That causes the government to think that it's better off than it is. And so that encouraged the government to be short when rates were zero. So why did the government borrow so much in T-bills? Well, because the Fed was buying the bonds and it made it look like yields were going to stay low for remember the low for long phrase. So we've got these multiple problems that are going on, and it endangers the dollar. So that's the basic case.
Instead of the Fed having such large balances, wouldn't the private sector be starting businesses and risking capital and bringing returns and adding to growth? Wouldn't all that money be better if it wasn't with the Fed?
That's right. And we're depending on private equity. So as the banks get squeezed out, because they're lending so much to the Fed, it's literally a floating rate loan from banks to the Federal Reserve so it can buy government bonds. So if that were freed up, that would allow the banks to at least consider a small business loan and inventory loan, the kinds of things that help the economy grow. And this is on a global basis. It's not just the Fed. It's all the major central banks doing the same thing, meaning taking money from the economy in order to buy government bonds. We need to be clear on that. I heard the previous segment, they talk about money printing. There isn't any money printing on it. It's just money borrowing, and they pay top dollar for it. The Fed pays 5.4 to banks and 5.3 to money market funds. So to the Fidelity and Vanguard and so on.
You know, Mitch, it didn't sound like those banks and bankers had a bunch of confidence in what was happening. So can you talk to the viewers and articulate two things, two major things, crisis of confidence leading to the end of fiat? And number two, can you articulate what's happening with the end of price manipulation when it comes to silver?
That gentleman who was just on CNBC is the former World Bank president. That gentleman is the definition of idiot squared as compared to Jerome Powell. Everything he said, without exception, is a lie. They do not know what they are talking about. And I'm going to get into something right now that proves it, and I'll do it in one paragraph. When you start stacking the infrastructure problems, which are in that article that I wrote yesterday, all detailed out, plus the defaulting private equity, i.e. BlackRock, plus the property tax fraud, plus the socialist fraud that you're now seeing play out in Minneapolis, LA, Boston, et cetera, et cetera, et cetera. The structural problems all correlate to the interest rates. It is good if President Trump can bring the government's borrowing rate down. That would be great. But he can't bring the long bond rate down. That's money available to the public. And as long as the Federal Reserve exists, they will print the bank's cocaine, therefore causing the compound cumulative deficits, M2, U.S. national debt, school district fraudulent bond debt, unfunded liabilities, all of which are allegedly transferring those liabilities onto all citizens, which do not have the money to pay for the financial sins of the Federal Reserve and the governments who practice socialism on the backs of the very citizens who produce the goods and services, while they, the government officials, siphon off the money in between, i.e. Minneapolis. To the question of, is fiat going to end? No. The problem is it has to be connected to commodities. And the reason why it more than likely won't end is because look at the situation we're in. Recasting the fiat into some other currency is a wasted effort because there is nothing to stop the Federal Reserve from blowing the bubble again. Think of that statement for a second. What is there to stop them from doing it again? As long as the Federal Reserve exists, the crisis of confidence will grow to the point of self-destruction each time, because socialism ends when you run out of other people's money. And thus, that is your proof of institutionalized systemic moral hazard by not enforcing the existing black letter of the law. No government in the history of the planet can outrun the rule of 72, nor can they outrun reverse amortization. What I'm saying here is the exact opposite of what the ex-president from the World Bank said. He is an idiot. He is a liar. He is a con man who took your money, the world's money, stuck it in his pocket to sit on CNBC and utterly flap his gums and say nothing of value to the benefit of society. This is the exact problem with the Federal Reserve. You have 23,000 employees sitting over there with Jerome Powell at the head of this snake, literally stealing money and doing nothing. The problem with the fiat isn't the idea of the fiat, it's the fraud that is spun by the institutionalized systemic moral hazard. You have it at the Federal Reserve level, and you have it at the school district level. We've proven it. It's irrefutable. To the point, we filed criminal complaints with the SEC, the DOJ, and the FBI, the district attorneys. Those who do not adhere to the black letter of the law and enforce it by virtue of their jobs, and that's their responsibility, they are culpable in aiding and abetting a criminal conspiracy to defraud. And in fact, that is what the Federal Reserve is. President Trump is right. He's going to have to kill the snake, and that is the Federal Reserve. There's no reason for it to exist. The inflation that you feel, that we all feel, the infrastructure that's broken across the globe lays at the feet of the Federal Reserve. And then these people that are selling, I only have one question, selling your metals. Do you really want to leave your cash or your excess cash in a bank that has the right to take your cash and hand you back a share in their bankrupt bank? Or would you rather have whatever its value is, it's in your hands in the form of metals? Think before you decide to jump off the ship and say, I got my profit, I'm gone. Think. The evidence doesn't support you.
In conclusion, there is going to be volatility. All right. That's 100%. There's going to be volatility. And that means do not panic, whether you're purchasing or whether you're selling. Do not panic. Do proper research. Do math. Don't get yourself in trouble. Okay. And if you have a second, please go to our website. You guys know we're not silver salesmen. We're mathematician fighters of the people. And by the way, I just did a rally this weekend. I hope you guys watched that video. It only got like 10,000 views. That's the cost of advocacy. I keep telling people, anytime I do advocacy, I lose so much money, which is why I need so much help. Not to mention we're fighting City Hall. So if you guys want to understand the fight in City Hall and all of the crimes and fraud that's going on and why it's important for someone like me, anyone that has a camera, anyone that knows how to use a camera, it's so vital to step up for the people, to give them a voice. And that's exactly what we're doing. So don't forget to go to those websites. Take care, you guys. I know there's a lot of rumors. I know there's a lot of craziness, but look at the macro situations. Understand that most of the demand is foreign. And then ask yourself, well, what does that tell us if everyone's selling and we had a massive price up and then followed by a massive price down? What does it tell us, guys? It's not about mom and pop, and likely mom and pop will be priced out eventually. Maybe I'm wrong. Time will tell. Other than that, guys, if you're out there just investing in learning and in your life and silver, your home, whatever it is, you guys already know we wish you luck and we hope you win.